Hi, this is Kim Watson. Welcome to this week's Big Picture. Well, what's happening? So there is there is some stuff actually happening in a market which is becoming so I say used to, or just shrugs so much off now. Everything seems like it's a bit lackluster at the moment, which it's just probably just going through a part of a cycle. Sometimes when a cycle's moving, it sort of gets to a point where it just sort of doesn't do too much, and you get a movement, and you get sort of this sort of thing are happening. So these points at the lows, the highs, then wherever the part of the cycle is, it may just be a bit flatter and less volatility, and then as things start picking up to the upside or downside, the volatility increases. People get excited. There's lacking of excitement at the moment. Oh, what a great thing not to have excitement, but obviously some people don't like that, but excitement's not good for you. So how are things chewing over? Well, we've seen quite a move here. Now, generally I rate the markets, or rate the individual currencies on a basis of economic strength. I look at the sentiment from what the big money's doing. Economic strength really looking at central banks, and also look at the data that's being released by each of the economies. The sentiment is really what the big money's doing and where it's putting its money effectively, or some of its money at least. And then I look at what's actually happened over the last 3 months. That's sort of a weighting of where the money's really actually going, or gone, or being moved to. So by adding it all up, it gives me a sort of a total through. I just grade them 1-7, very basic in that respect, but keeping it simple. And then you end up with the weakest currency and the stronger currencies, and if you wish, you can trade the strongest against the weaker ones. Now, we've seen some moves here. I've put the euro down as -3. It should be -2. I do beg your pardon. It's actually moved down a couple of spots. New Zealand dollar dropped down another one to last place at the moment. That may change eventually for certain reasons I'll come on to later, but quite rightly the euro's falling back there. It's I mean, the economic strength they really are a loss at what to do there. We're seeing numbers coming in, growth numbers, which I'll show you in a moment, which are very poor. The overall sentiment, well, what was a very bullish position in terms of asset managers is gradually reducing, and the net position there is just down to 20. It's sort of just positive on the 20 side, so it might not be too far before we get that switch, which often just sort of is a continuation move, effectively suggesting that there could be more weakness in the euro technically. The pound's moved up a little bit, but partly on the basis, well, the economic strength's not really changed too much. It's stayed pretty much the same, but with the no-deal Brexit being sort of delayed or almost taken off the table, money's been going back into the pound. The pound's benefited from that somewhat. Other currencies, the Canadian dollar, I think it's almost artificially here, and it should probably slide down a little bit there. It really isn't doing too well on the monetary side at the moment, but it's a change over 3 months, and that may see, as I say, see these two at least switch places at some point. Okay, let's have a look at the actual details behind the summary here. So still looking at the currencies as an individual currency until in fact I'm not even going to look at this here. We'll look at charts, so we'll ignore what the trends are doing. And in fact, I should have a downward arrow there, or a crossed arrow there. It's a bit of a muddle there, and and a positive arrow on the S&Ps. But let's look at the more important data. What's happening with the big money here at the moment? I say the big money is central banks. What are they doing? Well, we know there's pressure on the Feds to cut rates more by Trump, but they don't really need to. Now, the chance of an October rate was cut last week down to 34%. That's actually moved up to about 55% at the moment. So there is a chance or potential that traders are expecting to cut come October, but I do wonder if that's a blip as more than anything else. In terms of the big money, what's it doing? Well, it's still relatively bullish on the US dollar. We don't see lots and lots of contracts generally held on the US dollar. The numbers there are over quite modest overall. We just about every other currency has more options on it, or futures contracts, I should say. And then looking ahead for this week, well, what figures have we got out that's positive for the US dollar? Consumer sentiment, potentially, final GDP. We've got some key data coming out there. Core durable goods gives us a bit of a feel for the market, and personal spending. These are the US is very much a consumer-driven currency or country, so that's important data. They're coming out on Friday. We do have various Fed speakers, including the chair, but well, we could get some volatility, and it's worth just keeping an eye on the daily outlooks. I do on to just keep a check on the calendar. Eurozone. Overall, it's very flawed, as I keep on saying. The cuts, etc., that were put in 2 weeks ago, it's not really having a great effect. Seeing great expectations. In fact, hedge money's slipped or gone a bit less bearish, but asset money's reduced. Overall, it's really, as I say, getting more and more bearish effectively, and I wouldn't be surprised if we get a crossover and a continuation. Figures out this morning, French and German manufacturing services data was poor, and just about every figure missed a number there. The German manufacturing data in particular slowing up much quicker than expected. Things need to be done. Anyway, moving on, the pound. Well, the pound is very Brexit focused here. Asset managers reducing or getting a bit more bearish, actually, slightly. Hedge funds getting a little bit less bearish, neutralizing one another out somewhat. Only got speakers this week, not a great deal to be had there. I think it's probably possibly neutralizing. We'll look at it technically in a minute. The yen, there's no changes expected. We've got the Bank of Japan governor speaking on the 24th, which is currently, as I record this, actually early hours of this morning. At some point he's due to talk later. But you can see the asset money's getting more and more negative there, and they're getting, as I say, more bearish. The hedge fund money, that's coming off a little bit there as well. Aussie dollar. Well, there was pressure for cuts. They're not making cuts at the moment. It's the asset managers and hedge funds managers reducing their negative positions slightly. We've got again Reserve Bank of Australia governor speaking sometime this morning. Canadian dollar, it's not really. It's gone a bit lackluster at the moment, although things are looking more positive than many other of the major currencies here. It's somewhat stalled, and if anything, looks like they may be erring on the weaker side, and we've just got to keep an eye on the numbers as they're released. But there's no news this week of any significance, so we won't get too much of a clue from that point of view. What we are seeing is the asset managers' money coming out a little bit, although hedge funds again just neutralizing that a little bit, making it quite flat. Important one here then, the New Zealand dollar. Rates expected to be held this week when they meet on the 25th. The important thing here is that we're at the extreme levels that we once saw back in November-ish time 2018 in terms of the total net positions of contracts. It's at that as a bit of an extreme. Now, the last time we saw anything like that, as I said, was just under a year ago, and we saw a reversal put at that point. But we'll have to see. We may not get the same, but it is extreming here, and that such extremes. Okay, the asset manager money, that some of those short positions will reduce slightly. It may be just the early stages of a small rally, but all in all, the New Zealand dollar, it's between a rock and a hard place, or between Australia and China. But no. The outlook's not great overall for the New Zealand dollar. So any bonuses or any bounces here may just be on a weaker US dollar rather than a stronger New Zealand dollar. Right, okay, and finally the S&Ps, money still coming out, asset fund managers still reducing their positions there, although hedge funds are reducing their negative positions, maybe locking in profits, or just being scared out of the market, because we've seen, ignore this downward trend arrow here, we've seen it positive and going up to all-time highs. But the key thing here is China talks continue, and the other key thing is, if they're not putting the money in the equities, where else are these big asset managers going to be putting their money to make some more money? So that's where we are fundamentally and sentimentally. Better look at technicalities now, and we'll start off looking at euro dollar. Looking at it from a weekly point of view, you can see downward trend continues. It's slow, steady, choppy at times, very choppy at times, and the dailies really summarise that, what we're seeing here. I was wondering whether we were going to see a sort of more of a pitch up, but at the moment everything should technically or fundamentally it should be going down. We're getting lower highs, lower lows in this, and I do wonder if the bigger picture still is to the downside. I'm sure it is on the euro. The pound dollar now. Okay, let's go to the weekly first. And we'd seen a sort of half decent move here from that, following that divergence. Good push through the previous week. Last week, a bit of a doji kick here there, and we seem to have run out of steam for now at least, and maybe pulling off from here, just running into this weekly 21. We, as I say, things are running out of steam. You're seeing a lot of these markets run out of steam. When you come back to the dailies, no surprise, it's when you look at the pivots, it's right up into its R2, not far from the R3 pivot, so it's possibly stalling it in terms of range for this month at the moment. But it's an important point here. Does it continue rolling over? It's put a bearish pivot swing in here. If it triggers yesterday's lows there, it could be pulling off for maybe the daily 21, maybe even a bigger movement to the downside there, bigger correction. Overall, if we've got the potential of the Supreme Court hearings are supposed to be being released tomorrow, if they were to be said bring Parliament back, maybe we'll see a bit of a rally, because it just sort of again reduces the potential for a no deal in a sense, although that's been pretty much pushed on as a motion anyway. So that's the pound, the yen. Okay, so looking at it from a weekly perspective, and well, it had been just giving away everything it had gained previously. We were at sort of key lows here, and or had been at key lows from a weekly point of view. I'm not surprised it's pushing up. It may still push up even further. I do wonder if it'll push up towards the 50. Just been seeing a bit of risk off, risk back on, risk off for the gain, and that sort of movement is just sort of over the last week. Just seen it coming off a little bit, particularly Thursday, Friday there, and then Monday just holding its own there, a bit of a hammer going in. Maybe it will carry on pushing through into that daily 21. Okay, Aussie dollar. Can't get excited about the Aussie dollar at the moment. I'm still looking at this from this weekly point of view. I haven't actually changed that trend line. I just left it where it was really. Prices I've just tested it, tried to break through, never really gained too much, and again we're seeing this bearish pivot swing again, yet another bearish pivot swing. From a daily perspective, maybe we've got a chance of it going back and retesting those lows around the 66.85 area. It does look weak to me, and the prospects aren't good fundamentally, so all in all that's aligned to where it should be. Probably the disappointment in some respects in terms of the fundamentals have been holding up and everything else better, but I suppose it could have been a lot worse for the Canadian dollar, and it could have been pushing up a lot stronger, or the US dollar could have been pushing up a lot stronger against it, and in effect it's just neutralized it on a weekly basis. We're not really seeing any significant movement, even on a daily basis. It's tightening up. There's a very tight range here. Maybe at some point we'll see a break of that daily 200, but for now, well, it remains as a day trading currency out of the way. As a swing, I wouldn't even really want to be doing too much with it as a swing, unless it starts breaking above that daily 200. When then it may be a long swing, but for now, too flat. New Zealand dollar. I mentioned the potential reversals. Well, weekly it's again bearish pivot swing. It's putting a new low. It's fractional divergence here, and maybe a little, maybe a bit of an expectation of something more positive. It was the most positive currency yesterday. Here, making up Friday's losses, most of it anyway. Pushing up potentially. I mentioned, I'll come back to the weekly actually, and I mentioned looking at this back in 2018. This was the last time we saw the such negative positions kicking through. I believe it was back there, yep, 2018. That's the last time we saw such negative, and we had a bit of divergence kicking through there. But we'll see. Actually, beg your pardon, there it was here. Saw that it was the more negative positions. We saw double divergence kicking through there eventually, and eventually a bit of a retrace back to the 50. Could have a similar basis here, so just watch out. There is the potential for that to happen. There is, as I say, weak divergence here. I don't know this is saying. Let's just have a look at the MACD. Not really on the MACD here. And in fact, even back here, it didn't really have any MACD divergence. The signal line was getting weaker and weaker as it was going down there. So maybe that RSI may have been the clue. As I say, there was a double divergence there. Single divergence at the moment. Potential for a bit more of a retrace and move back even to the mean, maybe the 21 or the 50 there. Possibly on the cards, and then a continuation. I still think it's the weakest and should be the weakest effectively, or one of the weakest. Okay, and finally S&Ps. Let's have a look at the S&Ps. What's happening here weekly basis? Well, it looks like it's trying to push back into new highs territory. It's not a lot more to be said there. It's a bit iffy on the dailies. It's never quite did a divergence here. Maybe looking to struggling to push up further at the moment. Maybe if it starts selling off here, we could get a bit more of another bit of a correction. But overall, where else are people putting their money? The asset money, where's it going? And it really is forced to be left there or put into assets. Okay, not much else to say there. I wish you an absolutely great week. Oh, one last thing. We do get asked about brokers quite a bit. We are in the process of putting a full website together on brokers, but I thought I'd just share with you a broker that it's just. I mean, this is the platform. It's LMAX Global. Now they're really a professional broker with very, very tight spreads. And very small commission fees. The round trip on the commission fees is around about $27 per million. So it works out $270 a contract. So basically, or round turn per 100,000 contracts. So it's very, very tight in terms of spreads. Oh, you can barely see. Sorry, the euro dollar just poking there. It's a 0.4 spread on that. Benefits of the broker itself, well, I've been looking at it for a long time using it. It's their spreads are good, but it's the feels, etc. You're dealing here with they're not a normal broker. They are actually a more of an exchange. So you're actually dealing with a broker that deals with brokers and top tier banks. So you're sort of sitting in there. And they're very, very good. We've got a few clients that use them at the moment. We've got more going into using them, but they're particularly good. As I say, money goes in from brokers, so the class, the sort of A grade traders on these market maker type brokers, and some of the STP, ECN type brokers, money goes into this exchange. and you're trading in with the big money effectively. As I say, you can now. The thing what they've done for us is generally the smallest size account they will let people open with would be about 10k, but they have said that they'll drop that to 2k. Now, when you take into account their very thin spreads, their low commission costs, and everything else, you're talking about deal of the century. It really is a good deal there that they're offering, and as I say, the liquidity is second to none. So there we go. Just thought I'd tell you about that. You'll watch out for some more details, but if you want to find out more about LMAX, just go to our website. There's details. Just scroll down to where it says brokers, and there are details there. And just to remind you, you can lose more than your original money when you're trading FX and CFDs. So there you go. There's the warning, the risk warning in there. Have a great week. Have a great. I'll be back tomorrow. Bye for now.